Hello viewers, welcome to my channel. I'm Hasham. Already I have completed 10 problems on consolidated balance sheet, holding companies. So now in this video, I'm going to explain you the 11th problem of holding companies. So if you have watched the earlier problems, definitely at this situation, you are well conversed with the topic of consolidated balance sheet. So if you have not watched the earlier videos, I suggest you to go to the playlist of my channel, select the subject Advanced Corporate Accounting and the heading topic holding companies. Watch the first video introduction part. Then you can be able to know what we have to make in this holding company, how to make a consolidated balance sheet. So all the different issues I have discussed in that first part. Then starting first to 10 short problems I have explained you in detail. So watch those 10 short problems. Then totally 10 problems I have completed. Now I am in the 11th problem. So if you're first time on my channel, I suggest you to go to the playlist. I have uploaded so many subjects videos like financial accounting, advanced accounting, cost accounting, corporate accounting, managerial accounting, business statistics, income tax, financial management, investment management. So many subjects videos I have uploaded. Select your subject, select the topic, watch the video. Definitely you will gain a lot of knowledge from this channel. So now I am going to start the 11th problem. So before starting the 11th problem, I expect my viewers to have a printout of the problems which I have given in the link under my description. So before watching the video, get a hard copy, print out and keep it ready. Now 11th problem. From the balance sheet and information given below, prepare consolidated balance sheet. Balance sheet as of 31st December 2011. So two balance sheets, H Limited, S Limited. Share capital, shares of rupees 10 each, 5 lakh, 1 lakh. Holding company 5 lakh, subsidiary company 1 lakh. P&L account, profit and loss account is given 2 lakh rupees H Limited and S Limited 60,000. Reserves are given 60,000, 30,000. Bills payable, it is given only in S Limited. We don't have any bills payable in H Limited. Then creditors, we are given for both the companies. Fixed assets, both the companies. Stock, then debtors. Bills receivable is given only in H Limited. No bills receivable in S Limited. Now shares in S Limited, 7,500 shares at cost, rupees 75,000. That means the holding company has purchased 7,500 shares in subsidiary company. So first of all, we will find out how many shares are there in subsidiary company. The liability side, you see, total equity share capital 1 lakh. The face value of each share is 10 rupees. So 1 lakh divided by 10,000 shares. The total number of shares in S Limited is 10,000. Out of 10,000, 7,500 shares are held by H Limited. Remaining 2,500 shares are held by outsiders, minority interest. Now additional information, the bills accepted by S Limited are all in favor of H Limited. The bills accepted by S Limited. So see the balance sheet, liability side, bills payable. Bills payable, liability side 15,000. So there is a bills payable 15,000 on the S Limited. And it is saying that all these 15,000 bills are accepted on behalf of H Limited. That means intercompany debt. 15,000 rupees bills accepted. Who has accepted? S Limited. Who has drawn the bill? H Limited. तो H Limited की बैलेंस शीट में बिल्स रिसीवेबल और S Limited की बैलेंस शीट में बिल्स पेएबल. तो कॉमन डेट हो गया, इट विल बी डिडक्टेड. तो दिस 15,000 rupees will be deducted from bills receivable and also bills payable, just like the previous last two problems we were doing. Next point, the stock of H Limited includes 25,000 rupees bought from S Limited at a profit to latter of 20% on sales. Exactly similar to the previous problem. H Limited is having a stock of 25,000 rupees and this 25,000 rupees stock was purchased from S Limited and S Limited has charged a profit of 20% on sales. Previous problem, last problem we are given 25% on cost, but here it is given 20% on sales. So there is no need to suppose. In the previous problem, we have supposed let the cost be 100, profit will be 25, selling price will be 125, like that. So that point we will apply only if it is given on cost. Here it is not given on cost. The profit is 20% on sales. So what is the sale price? 25 lakh. 25 lakh rupees the sale price. So on 25 lakh we calculate 20% profit, and that is unrealized profit. And that unrealized profit we have to give effect two ways. First, unrealized profit will be deducted from stock of H Limited. Secondly, this unrealized profit will be deducted from share of revenue profit from S Limited. Then all the profits of S Limited has been earned since the shares are acquired by H Limited. That means whatever P&L account, the profit and loss account of S Limited shows 60,000. The P&L account of S Limited shows 60,000, and it is saying that all these profits are earned after acquisition. After acquisition means it's a revenue profit. That 60,000 rupees P&L account balance is a revenue profit because it is earned after acquisition. But there was already the reserves of 30,000 at that date. But reserves of 30,000 of S Limited, that reserve were already there before acquisition. So this 30,000 is a capital profit, whereas 60,000 rupees is a revenue profit. So at the time of acquisition, already there is a reserve of 30,000, and that is a capital profit. And 60,000 rupees what is given in the balance sheet, that 60,000 it says have been earned after acquisition. That's the revenue profit. That's it. Over. Problem completed. Now see carefully. Consolidated balance sheet of H Limited and subsidiary S Limited on 31st December 2011. First, to draw the blank balance sheet as it is. Every problem we are drawing the same format of the balance sheet which is given by Companies Act 2013. So simply you have to remember the marshalling of items in the balance sheet, right? And note number you have to write down. The amounts we have to take only in after finding out the working notes. We'll make all calculations in working notes. We'll show the detail in notes. Now, share capital number 1, reserves and surplus 2, minority interest 3, non-current liabilities are not there. But for the sake of formality, we are writing. Just put a dash. Current liability, trade payable 4th. Then short-term loans and provisions not there. But for the sake of formality, I am writing, put a dash. The total. Fixed assets, tangible, intangible, non-current investment, current assets, inventories, trade receivable, cash and cash equivalent, other current assets. That's all. Blank balance sheet. Now, working notes. First of all, how many shares are there in S Limited? 1 lakh divided by 10,000 shares. The share capital is 1 lakh, the face value of each share is 10 rupees, 10,000. Number of shares held by H Limited, 7,500 given in the problem. The number of shares held by minority interest, 2,500. Out of 10,000, 7,500 held by H Limited, 2,500 by outsider. The share of H Limited, 7,500 divided by 10,000, it comes to 75%. 75,000 divided by 10,000, 7,500 divided by 10,000 into 100, 75%. Similarly, 2,500 divided by 10,000 into 100. I am calculating percentage. Without percentage, if you want, it will be 0.75 and 0.25. You can take either way. If you want percentage, multiply by 100, you will get 75%. If you don't multiply by 100, you will get 0.75. And here you will get 0.25. Either way, you can get the same answer, no issue. Now stock. The stock of H Limited includes 25,000 rupees bought from S Limited, which company has charged a profit of 20% on sale. That sentence is given in the problem. H Limited is having a stock of 25,000, and this 25,000 stock was purchased from S Limited, and S Limited has earned a profit of 20% on sales. Remember this point, on sales. Previous problem we have given on cost. So when it is on cost, we have made the supposition. We have assumed one equation, we have assumed, but here no need of equation because directly it is given 20% on sales. What is the sale price? 25,000. So unrealized profit in stock is 20% on 25,000 is 5,000. This 5,000 rupees, what is the effect? Deduct 5,000 rupees from stock of H Limited in balance sheet. Secondly, deduct 5,000 from share of revenue profit from S Limited under reserves and surplus. This is the effect. This is the only new point. Previous problem also we have adjusted the same thing. The only difference, it was given on cost, here it is on sales. Now third, capital profit. Any profit at the time of acquisition. So it is given in the problem, the reserves 30,000 was existing at the time of acquisition of shares. So this 30,000 rupees is the capital profit. Now we distribute 75% of 30,000 goes to H Limited. The share of capital profit of H Limited, 75% of 30,000, 22,500. And share of capital profit of minority interest, 25% of 30,000, 7,500. We have divided 30,000 between share of H Limited and minority interest. Revenue profit. It is given all the profit which is there is earned after acquisition, means revenue profit. The P&L account shows a balance of 60,000 and all these 60,000 are earned after acquisition, revenue profit. So we divide 60,000, 75% of 60,000, 45,000 will go to H Limited and 15,000 will go to minority interest. Now goodwill or capital reserve. Now investments of H Limited 75,000 given in the balance sheet. In the balance sheet asset side, investment made by H Limited in S Limited 75. From this we deduct two. What are the two? First, paid up share capital, second share of capital profit. Paid up share capital 7,500 shares into 10 rupees 75,000 and share in capital profit, here we have calculated share of capital profit of H Limited 22,500. So 22,500. 75,000 plus 22,500, 97,500. So now subtract 75,000 minus 97,500, you are getting negative figure. When you get negative figure, it's a capital reserve, not goodwill. If you get positive, it's a goodwill. Negative, capital reserve. So we get a capital reserve of 22,500 and this will be taken under reserves and surplus. Next, minority interest. In minority interest, we take the paid up share capital, share of capital profit, share of revenue profit. How many shares outsiders are holding? 2,500. So 2,500 into 10, 25,000. Share in capital profit, here we have calculated, share in capital profit is 7,500. Share in revenue profit 15,000. Take the total 47,500 is the minority interest over. So basic calculation working notes we have completed. Now we'll come to notes forming part of financial statements. First note, share capital. In the balance sheet you can see how many shares are there. 50,000 shares of rupees 10 each, 5 lakh, holding company. Share capital will take only holding company, not subsidiary company. So 5 lakh rupees we have taken here, first. Second will take reserves and surplus, 3,22,500. So how we got 3,22,500, you can see here. The reserves and P&L account of H Limited will remain same. The reserves of H Limited, P&L account of H Limited will take same. Now capital reserve, just now we have calculated here 22,500. This capital reserve 22,500. Now revenue profit from S Limited. From S Limited, how much revenue profit we are getting? Here somewhere I have calculated revenue profit is here. Revenue profit, share of revenue profit from H Limited is 45,000. From this share of revenue profit, deduct the unrealized profit in stock. The unrealized profit in stock is 5,000. Here I told you, deduct 5,000 rupees from share of revenue profit from S Limited under reserves and surplus. So under reserves and surplus. 45 minus 5, 40,000. Take the total 3,22,500 I have taken under reserves and surplus. Minority interest, already we have calculated 47,500. So here you take minority interest. Then trade payable, fourth. Trade payable. Trade payable consists of creditors and bills payable. So creditors, we add up the creditors of H Limited and S Limited, no adjustment, nothing. दोनों को add कर लो, 1,70,000. Now bills payable. Add up the bills payable of both the companies minus intra-company debt. It is given in the problem. All the bills payable of S Limited are from H Limited only. Inter-company निकाल देंगे 15,000. So bills payable of H Limited is 15,000. S Limited dash. Take the total 15,000 minus intra-company debt 15,000. 15,000 is the total bills payable of S Limited. Deduct nil. So total 1,70,000 is the trade receivable. So trade payable. Trade payable 1,70,000. We got the total 10,40,000 liability side total. Now come to asset side. Here tangible fixed assets. Simply add up the assets of H Limited, S Limited. 4,60,000. Take 4,60,000 here. We don't have any intangible asset. Goodwill we don't have. We got capital reserve. Then inventories. Inventories, we add up the stock of H Limited and S Limited. दोनों कंपनी के स्टॉक को ऐड कर देंगे 4,20,000 minus unrealized profit in stock. Here I have given deduct 5,000 rupees from the stock of H Limited in balance sheet. So 5,000 rupees stock we have to deduct. So 420 minus 5, 415. Take 415, 4,15,000. Now trade receivable. Trade receivable consists of debtors and bills receivable. Simply you add up the debtors of H Limited, S Limited. Both the debtors you add up 1,60,000. Bills receivable. Now you see, bills receivable of H Limited is 20,000, S Limited nil. In H Limited we have bills receivable in the problem 20,000. S Limited no bills receivable. Take the total 20,000 minus intercompany debt. 15,000 rupees bill is common, drawn by one company on another company. So this 15,000 will be deducted from accounts payable, bills payable as well as bills receivable. Here we have deducted 15,000 rupees from bills payable. Here same 15,000 from bills receivable, 5,000. Take the total 1,65,000. 1,65,000 is the trade receivable. That's it. Cash and cash equivalent is not there. Other current assets are not. So this is the end of problem number 11. Now we'll start the next problem. Problem number 12. See the 12th problem. A Limited holds 80% of the equity share capital of B Limited. So A Limited is the holding company. B Limited is the subsidiary company. And holding company holds 80% of shares in subsidiary. Remaining 20% shares are held by outsiders minority interest, which was acquired on 31st December 1998. When the latter company had a credit balance of profit and loss account 15,000 and general reserve of 20,000. Now see here carefully. At the time of acquisition, the general reserve balance was 20,000 and profit and loss account balance was 15,000. These are the balances appearing at the time when A Limited acquired the shares in B Limited. So these two are the capital profit. I told you in the previous sessions also. Any profit or reserve existing at the date when the shares are acquired, it is called capital profit. And any reserve or profit increased after acquisition, that means the company has earned the profit or reserves after the acquisition, that is called revenue profit. But here 15,000 and 20,000, these are the capital profits. Stock held by A Limited includes 5,000 for goods supplied by B Limited at a profit of 20% on selling price, exactly similar to the previous problem. The holding company A Limited holds 5,000 rupees goods which are purchased from B Limited, and B Limited has charged a profit at the rate of 20% of selling price. That means B Limited sold the goods to A Limited, and A Limited's goods are still in the go down. A Limited has not sold it. So we have to find out how much profit B Limited has earned on this 5,000 rupees. The profit is 20% on selling price. So 20% of 5,000. 20% of 5,000, it comes to 1,000. So this 1,000 is called unrealized profit in stock. And this unrealized profit in stock will be deducted from stock and also deducted from share of revenue profit from B Limited. We have to calculate what is the share of revenue profit from B Limited. From that share of revenue profit, deduct 1,000 unrealized profit in stock. From the following balance sheets, prepare a consolidated balance sheet as on 31st December 2000. So we are making the balance sheet on 31st December 2000. Now, liability side, A Limited, B Limited, share capital, equity shares of 10 each, 5 lakh, A Limited, 1 lakh, B Limited. Then capital reserves are given in A Limited. Remember, A Limited is a holding company. All the reserves and profit and loss account of holding company will appear same in the consolidated balance sheet, no adjustment, nothing. So here capital reserve of A Limited 1 lakh, definitely will take it under consolidated. Similarly, general reserve 1,20,000 of A Limited, same. Whereas 30,000 is the general reserve in B Limited. Actually, how much was the general reserve at the time when shares are acquired? In the first paragraph, it is given general reserve 20,000. When shares are acquired, general reserve balance was 20,000 and balance sheet date general reserve balance is 30,000. That means 10,000 rupees general reserve increased after acquisition of shares. So this 10,000 rupees is the revenue profit. Similarly, profit and loss account. Profit and loss account at the time when shares are acquired was 15,000. 15,000 rupees was the P&L account balance at the time when shares are acquired. And at the balance sheet, profit and loss account is given 10,000. In B Limited, profit and loss account 10,000. So at the time of acquiring the shares 15,000. On the balance sheet date, it has come down to 10,000. That means decreased. Profit and loss account balance has decreased after acquisition. Now, creditors, bills payable, bank overdraft. Then freehold property is given, furniture is given for both the companies. Investments, 8,000 shares of B Limited. Actually, B Limited is having 10,000 shares. How? Total share capital 1 lakh. The face value of each share is 10 rupees. So 1 lakh divided by 10,000 shares. So out of 10,000 shares, 8,000 shares are held by A Limited, 80%. Remaining 2,000 shares are held by outsiders, minority interest. Then stock, debtors, cash. That's it. So in the whole problem, only one adjustment. That is stock, unrealized profit in stock. Remaining all items are same. First of all, we have to calculate the capital profit. Once you get the capital profit, we can easily calculate the goodwill or capital reserve, minority interest. Then we have to calculate the unrealized profit in stock. That's all. Now, see here. Consolidated balance sheet of A Limited and subsidiary B Limited as on 31st December 2000. Now, blank balance sheet first of all will make as per the Companies Act 2013. Equity and liability, shareholders fund, share capital, reserves and surplus, minority interest, non-current liability, current liability, trade payable, short-term loans and provisions. See, take the numbers 1, 2, 3, 4. Then here also you take fifth number. Short-term loans and provisions, 5th, 6th, 7th, 8th, 9th. And last one, 10th. Numbering we have given for all the items. Right? Now, amount we have to take after making the working notes. Now, first working note. Share of A Limited is 80%. And 80% of shares of B Limited are held by A Limited. Holding company holds 80% of shares. The minority interest holds 20%. Now, capital profit. Any profit or reserves appearing at the date of acquisition of shares are called capital profit. The first paragraph it is given at the time of acquisition of shares, 15,000 rupees balance in P&L account and 20,000 balance in general reserve. That is given in the first paragraph. So 35,000 rupees is the total capital profit. Now we divide 80% of 35,000. 28,000 is a share of capital profit of A Limited. And 20% of 35,000, 7,000 is a share of capital profit of minority interest. Now easily we can find out goodwill or capital reserve. Goodwill or capital. Investment of A Limited. You can see the balance sheet. In the balance sheet, asset side, investment in B Limited. How much investment A Limited has made in B Limited? 1,20,000. Now from this we deduct two items. Paid up share capital and capital profit. Paid up share capital. 80% of share capital. The total share capital of B Limited is 1 lakh. The total equity share capital of B Limited is 1 lakh. So 80% of 1 lakh, 80,000. Share in capital profit, just now we have calculated 28,000. Share in capital profit, 28,000. So total 1 lakh 8,000. Subtract 120 minus 108. 12,000 rupees is the goodwill because positive value. 120 minus 108, 12,000 goodwill positive. That's why we are taking goodwill. Over. Now we can calculate revenue profit. The profit or reserves generated after acquisition. After the date of acquisition. So we'll compare the reserves. First of all, reserve. Increase in reserves. See here. At the time when shares are acquired, there was a reserve of 20,000. General reserve balance was 20,000 at the time when A Limited purchased the shares of B Limited. But on the date of balance sheet, the general reserve was 30,000. In the balance sheet, you can see. In the problem, you can see in the balance sheet, General reserve balance is 30,000, B Limited. Whereas at the time when shares are acquired, it was 20,000. So how much is the increase in general reserve? 10,000. Increase in reserves, 30,000 minus 20,000, 10,000. This 10,000 rupees are generated after acquisition. So revenue profit. Similarly, decrease in P&L account. Profit and loss account has not increased, that is decreased. At the time when shares are acquired, the balance was 15,000. P&L account balance was 15,000 when the shares are acquired in 98. And balance sheet date, the P&L account is showing 10,000. From 15,000, it has been reduced to 10,000. The decrease in P&L account by 5,000. The increase in reserves by 10,000, decrease in profit and loss account 5,000. The revenue profit earned is 5,000. 5,000 rupees revenue profit. 80% of 5,000 goes to A Limited, 20% of 5,000 goes to minority interest. The share of A Limited 80% of 5,000, 4,000. The revenue profit mein, out of 5,000 revenue profit, 4,000 revenue profit goes to A Limited and 1,000 revenue profit goes to minority interest. Now minority interest, we'll take three things. Paid up share capital, share in capital profit, share in revenue profit, that's it. Paid up share capital, 20% of 1 lakh. The total capital of B Limited is 1 lakh, 20% of 1 lakh, 20,000. Share in capital profit we have calculated here. Capital profit, share of capital profit in of minority interest 7,000. Share in revenue profit 1,000, just now we have calculated. The total 28,000 minority interest that will be taken here. Now, next one is unrealized profit in stock. It is given that A Limited is having some stock, 5,000 rupees worth of stock A Limited is having, and this stock has been purchased from B Limited. Subsidiary Limited के पास से Holding Limited purchase करा, and Holding Limited is having the stock of 5,000. In that 5,000 rupees, B Limited has charged a profit of 20%. Profit of 20% on selling price. It is given in the problem. B Limited has charged a profit of 20% on selling price. Selling price is 5,000. So 20% of 5,000, 1,000. So 1,000 rupees is the unrealized profit in stock. Unrealized profit in stock. This 1,000 will be deducted from stock and deducted from revenue reserve or revenue profit from B Limited. Revenue profit from B Limited, how much he got? 4,000. A Limited got 4,000 rupees revenue profit from B Limited. From that 4,000, deduct 1,000. And from the stock of A Limited, deduct 1,000. That is the effect. Now notes. Our working notes are completed. Now we'll come to the notes forming part of financial statements. First note, share capital. We'll take the share capital of only holding company A Limited. We should not take the share capital of B Limited. So A Limited 50,000 shares of rupees 10 each, 5 lakh. So 5 lakh rupees we have taken here. Now second, reserves and surplus. Reserves and surplus. I told you in the beginning itself, the reserves and P&L account of holding company will appear as it is. Here holding company is A Limited. So A Limited is showing capital reserve. In the balance sheet you can see capital reserve of A Limited, general reserve of A Limited, profit and loss account of A Limited. So A Limited ka completely all capital reserve, general reserve, P&L account. Revenue profit earned from B Limited. Revenue, share of revenue profit from B Limited is 4,000. Out of 4,000, unrealized profit in stock 1,000 will be deducted. So 4,000 minus 1,000, 3,000. So total reserves and surplus 2,63,000, you can take it here. 2,63,000 reserves and surplus. Now minority interest already we have calculated. Minority interest here we have calculated 28,000. So we have taken 28,000 minority interest. Next comes trade payable. Trade payable consists of trade creditors and bills payable. Creditors and bills payable combined together will become trade payable. So creditors A Limited, B Limited, both are given in the balance sheet. We have simply added the creditors. Similarly bills payable. Bills payable also given in the problem. Add up both the bills payable. There are no intercompany debt. No intercompany transactions are there. So 2,08,000. So this 2,08,000 we have taken trade payable. Now short-term loans and advances, short-term loans and provisions. We have bank overdraft. We don't have bank overdraft in A Limited, but B Limited there is a bank overdraft of 6,400. So 6,400 we have taken here. The total of the liability side 10,05,400. Now I'll come to the asset side, tangible fixed assets. Tangible fixed assets, we have freehold property, A Limited, B Limited combined. Furniture, A Limited, B Limited combined. The total for tangible fixed asset 2,68,500. 2,68,500. Intangible asset will take the goodwill. Intangible asset will take the goodwill. Already we have calculated goodwill here. Where is that goodwill? Here. Goodwill we have calculated in working note 12,000. 12,000 rupees goodwill we have taken. Now non-current investments are not there. Inventories 8th schedule, inventories. Inventories means stock. The stock of A Limited, B Limited combined less unrealized profit in stock. I told you here. The unrealized profit in stock will be deducted from the revenue profit, and also it is to be deducted from the stock. Double effect. So 1,000 we have deducted, 5,36,000. 5,36,000. Now trade receivable. Trade receivable consists of debtors. We don't have any bills receivable. If there is any bills receivable, we would have taken that also. But here we don't have any bills receivable. So trade debtors, A Limited, B Limited, 1,24,400. 1,24,400. Cash and cash equivalent, bank balance. A Limited 64,500, B Limited no bank balance. Total 64,500. 64,500. That's all. The balance sheet is tallied 10,05,400. That's all. So totally 12 problems I have explained you in detail regarding this holding company's consolidated balance sheet. Hope you are following me, following my lecture. If it is satisfiable to you, give a like to the video, share it in your group, subscribe my channel. We'll continue the next problem in the next video.